us this morning. Nishchal, hi morning and thanks so much for joining us. First up, we have to talk about the stock that could potentially give big moves today, or at least be in the green. That could be Infosys. What's your take on the numbers? And along with that, it's done much better than its counterparts. How do you think the stock could trade today?
Hi, morning to you and your viewers. Thanks for having me on this show. Yes, I think Infosys has been a positive surprise, but I think a bit of a disappointment basically that the guidance which they have given is actually a bit muted than the market was expecting. So I think as far as the outlook on the company is concerned, yeah, better than the most of the other stocks or the large caps basically, which have guided either for a negative or a 1 to 2% kind of a number for the current year. Infosys definitely has done better than that, and it would be in the green today. But I think I would have expected a more a better guidance, basically from 1 to 3%.
Indeed, Infosys will be the key to watch out for. But Nishchal, do you believe that the mid and small size IT companies can actually pick up from the sentiment that they're getting to understand from Infosys? Because within the large cap IT names, it was indeed Infosys which managed to come out with a good guidance, and rather Wipro happened to surprise on their order book. So help us understand that. Do you believe that now it's time to look out for some of the other and broader market IT names?
I think it is still 1 or 2 quarters away, because if you really look at it, why they are given a muted guidance on the top end is for the reason of the macros. And most of these companies, I think that way they are maintaining, saying that the macros are still very uncertain, and that's why they are not able to guide very strongly. So I would actually wait out for another 1 or 2 quarters basically before turning positive on IT. As far as mid caps and all our mid caps and small caps are concerned in IT, I think stock specific is the way to go as far as mid caps and small caps are concerned, because we are still not seeing wind behind the sail as far as IT is concerned, that all boats will rise. And that's why it has to be very, very stock specific.
Okay, so that's the sense on the entire IT space, and still continuing to be stock specific.
An opportunity. But Nishchal, how do you see the pharma sentiment picking up within the investor community? Is it good to expect that the pharma space in the short term can underperform for a bit? Because of late, we haven't seen much of a participation from the large names.
So I think everybody is a little bit worried, basically, the way the tariffs are going to play out in the US. And the Trump administration from time to time has been threatening about 100%, 200% kind of tariffs, and nobody really knows which way it will go. But I think that's where the market is a bit worried about it, and people are going from day to day, week to week kind of situation. But if you really look at it on a broader sense, I think within the pharma, the CRAMS space is doing very well. And that is China plus one kind of a thing, basically, which is working out very well. So there are several stocks which have done really good as far as the CRAMS space is concerned. So my preference is for the CRAMS space, because it is a little bit less dependent on how the tariff thing is going to play out as far as US is concerned. And that's why the China plus one strategy is also playing out well. So I prefer the CRAMS space within the pharma.
Dr. Reddy's, but Saumil, while we're talking about Dr. Reddy's, would request you for a chart check on that. And along with Dr. Reddy's, we also have Natco Pharma from the Pharma Pack that's in focus today, on the back of the news flow that the company is going to be acquiring a 35.7% stake in Adcock Ingram, which is a South African company, for 2,000 crore rupees. So, Saumil, a chart check on both Dr. Reddy's and Natco? Saumil, I believe you'll have to unmute yourself, please.
Apologies. Let's start with Dr. Reddy first. Dr. Reddy is exactly trading at 200 daily exponential moving average. It has been forming a small ending diagonal pattern on the hourly charts. I'm extremely bullish on this stock in the very short term and in the medium term outlook both. However, it could dip down till 1220, 1200 levels, but once that will be a very good buying opportunity. And on the upside, the breakout levels would be around 165. Once it is above 165, I think the rally starts and the targets would be higher than 1350 levels. So bullish in the medium term outlook, bullish in the short term. Buy on decline should be the strategy for Dr. Reddy's. Now coming to Natco Pharma. Natco Pharma is also forming a flag pattern. A bullish flag pattern, very bullish on this stock as well, trading exactly at 200 daily exponential moving average. Buy on decline should be the strategy. The support would be around 1009 and the second support is around 960. So these are the two support levels. Buy on decline should be the strategy. I'm bullish on in short term and medium term both. The targets would be around 1190.
90 target on Natco Pharma, and that's the view coming in on the charts. Pardon me, for Dr. Reddy's as well. But Nishtha, before we let you go, also want your take on the entire consumption space, given the kind of numbers we've seen from Tata Consumer. Nothing too surprising, largely muted or neutral quarter, you could call it, for Tata Consumer. While salt has done well, tea has seen double-digit growth as well. What's really concerning is the 80 bips market share loss that they have seen in tea. Other than that, the underlying volume growth is looking steady at 6.8%. We were expecting 6, so looking healthy on that front. But Nourishco continues to remain slightly mud. Nishchal, any first takes on Tata Consumer, and what would your pecking order be within these large pure play FMCG names?
So, unfortunately, I do not track Tata Consumer, so I would not be able to comment on that. But I think the broader space within the consumer, I think second half is the one basically where we are looking for strong resurgence, both in terms of volume as well as pricing. So I think this quarter is going to be sort of not muted, but I would say a bit more encouraging. But the commentary is what one should focus on, because when we see a few of other companies, especially on the consumer side, they have been saying that they are seeing some green shoots. So that's why I think basically that one should be a bit patient with the consumer sector. There are all the broader macros which are in place: interest rate cut, IT cut, and good monsoon. I think all these things are good basics to help the consumer sector grow. So wait for it. I think if you are invested, remain invested in the consumer sector.